Welcome back, traders. This is the Options Trader Lounge. Today we are going to be talking about the price action that took place the prior week. Now that we are entering a new week and with earnings ahead, this will be a very good trading week with a lot of price movements to occur and a lot of price levels that we need to monitor this upcoming week. So without further ado, welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax. Let's get right into it. Now, I do apologize, I've been on a bit of a hiatus. I've been waiting for this moment to happen. We did miss CPI and I did miss providing an update. But really, this past week, I've been just really playing it to the long side, waiting for more news to develop. You know, CPI was one of the big ones, but to me, earnings was going to be more important because that is when we finally get the valuations of Q2 to come in, and that is what we're going to be focusing on this week. Now we're going to be looking at the SPY. What we have here is the S&P 500 ETF SPY, and this made a significant move to the upside. We finally tested the 450, but by Friday we fully redacted that level and we now close at the level of 449.28. But more importantly, what I really want to focus on is going to be the triple Qs. The triple Qs NASDAQ closed down on Friday with a negative 0.02%. Now, that move was more of a level where it kind of just sat there. However, it did touch a level of 382.86. But more importantly, what we are looking at here are really big levels. What I had drawn out here on Friday was a really strong level that I was really interested in to be tested. Now, how I found this level was by zooming out. So the thing here is when we are zooming in, right, we need to also look out to the bigger picture. So what I saw on the 3-year weekly chart was really strong levels that I thought would act as a perfect resistance point. Now, the way I look at this was to look at level to level on strong resistance points or pivot points in the market. Now, what we saw here back in 2021 to 2022 was this level here, this 382.65. Now, the market clearly rejected this level here on the prior week, right? So this 382.65 was tested once, twice, and then obviously we got it tested this prior week. We also see it flirt around this level here. It acted as a support, but obviously it could not resolve higher, and eventually the market broke down. So what we saw take place on Friday, now if we zoom in, is a very important candle I think that we all should pay attention to, especially considering that the NASDAQ has led the way uh, throughout this market rally. We are up significantly on NASDAQ, right? However, on Friday we got a really strong sell signal. Now, what we have here is in technical terms, in uh, candle structure formation, right? On a technical standpoint, what we have here is a shooting star, where we can clearly see a smaller body as a result of a upper larger wick, right? So what we can pull from this is that the market had traded up, hit this 382.65, 382.86 level, right? And the market could not sustain at this level, and eventually it had to close down where it sits now, back at 379.07, right? So what is it telling us, and what is it telling us in terms of buyers and sellers? Because candle formation, especially on the daily candle formation, is telling us the buyers and sellers within that trading day. Well, what we want to pay attention to is the formation, but also the placement location of these candles. So what we had seen, right, days before this candle was a run up to this level, right? Strong buying, strong momentum to the upside after this breakout that we've seen here at 372.50, right? Tested once, twice, three breakthrough, and then we get a rejection pause on Friday. Now, this is significant in this sense because what we what we saw here on Friday was was a shooting star candle, which is ultimately a reversal candle in technical terms, because we are finally seeing a point where the market would buy, and then reject. Now, what we are facing at this point coming Monday is the result after, right? So now we need to know what is going to happen after this point here on Friday, right? So come Monday, we need to see how the formation after in relation or in reaction to Friday's movement, how will we resolve to this point? Well, there's a couple key factors and a couple key um, prediction that we could make. Obviously, no prediction is 100% accurate, but we can make these assumptions in the market to place our bets and the trades. Now, we want to make assumptions in the market because then we can get a clear direction on how we want to trade this. But we have to understand that whenever we make these assumptions are based on prior price actions. But we must remember that no result in the trade, whatever direction we take thereafter, is 100% certain. Let's say we decide to buy on this rejection, right? Let's say the market will pull down to this level here and close this gap that we see here. So let's say the market will trade down all the way to 375 or 372, and we decide to place a buy here at this level because now that we see this rejection candle, we must see a follow through to the downside. And that is what I personally will conclude to this result, right? Uh, what we would assume to happen next is a rejection and the market will move down. Well, we can see that we could possibly test this break point here, right? This 372 50, because what typically happens is whenever the market will break a strong, significant previously selling point, right, and we get a breakthrough, what we will typically see if we would like to see a continuation, we would like to see the market eventually pull back and test this level, trade around this level here, um, because whenever the market breaks through a get a trading point and creates a gap, the market will tend to trade around the levels of gaps, and eventually we would want to see a resumption to the upside, and that is the possibility that might take place. However, if the market trades through and then eventually fails to the downside, we got to be prepared for that side as well. So what I had done on Friday was, because I had mapped in these levels here at 382.50, what I had done was place a downside bet. Basically in the option world, the technical bet strategy that you could take to the downside was to sell call credit spreads, because the call credit spreads would basically mean that you're selling either a 385 strike point and then you're buying a strike higher. So for example, or I would be buying a 390 strike point, which is somewhere up around here. So you're selling a strike and then you're buying a strike higher as a bet to the downside if you're trading vertical spreads. And so that is what I've done to protect the account, because obviously I'm still generally net long to the upside, but to hedge the portfolio would in this case, seeing the Friday's result, would be a smart bet to place. because even though I'm net long to the upside long term, selling selling a hedge, or in this case, selling a vertical credit spread on the call side, would allow myself to capture some downside move, but also protect my upside overall net bias, right? So that is what I did on Friday. And it's very simple to do in options. What I like to trade with is Tasty Trade using their platform. And you just place, click and trade, and place your bets. But the reason why I'm still net biased to the upside is because when we zoom out to the weekly chart, right? What I'd referenced back here to choose my levels is the weekly charts. Um, we are still positive on the upside in terms of momentum. Now, momentum will have its moments of, either a temporary pause or a longer pause, but the direction is still strong to the upside if we look at the weekly candle. But the reason why we zoom in closer to the daily candle is so that way we could understand a little bit better, how far has this market gone, right? How far is this price action taking us, and we want to make sure that we can choose the right levels in the markets. So in so now that we're looking at this upcoming week, we need to focus on what is ahead of us, right? So the biggest thing is earnings, and we are about to see Q2 earnings in the stock market. Monday is going to be a bit quiet, right? With a few opening big names. We're first going to focus off with tech, I'm sorry, we're first going to focus off with financials, and then we're going to move over to tech, right? So banks are going to lead the way into earnings for Q2, and then we're going to start to see many of um, the tech names to come the week after. So right now on Monday, we're gonna see at the close of First Bank, and then on Tuesday we're gonna see Charles Schwab, Bank of America, Morgan Stanley, PNC, a bunch of these names, and then obviously more brokers to report in the afternoon. Wednesday we're gonna see Goldman Sachs, and then finally this is gonna be a big one, but it's gonna be Tesla at the close on Wednesday, and then Netflix, United Airlines, and IBM. Then obviously Tuesday is going to be Johnson& Johnson, American Airlines. D.R. Horton is going to be a big one because that's going to report on how the housing market for new development, to be more clear, how that is developing. And then obviously, smaller names, Capital One. And then obviously on Friday, we're gonna get American Express, which I want to say that a lot of people are going to be very interested in. Oh, and also to auto nations, because this will give us a view on how auto sales are going on within the economy that we're in right now with higher interest rates, right? Um, Now looking at the economic calendar, right? The biggest market mover is going to be retail sales month over month, and then building permits on Wednesday on July 19th. So Tuesday 18, retail sales month over month. Wednesday 19, building permit sales, or building permits creations. So these are the bigger things that we want to watch out for in the midst of the bigger picture of earnings, right? So earnings for Q2, as we know, was the point, right, which basically ran from March, April, and May, right? Uh, I'm sorry, April, May, and June is Q2, and so we're gonna see the earnings reports for those months. Now, I want to make clear those months were very eventful in the sense that we had a lot of layoffs, and so we want to see how these layoffs are gonna translate into the Q2 earnings. Obviously, as we know, layoffs resulted in higher stock prices, right? Higher stock prices in the sense that businesses were reducing expenses. Now, that's, on a microeconomic standpoint. But on the macro end, what is it doing for the the workforce? Well, people are laid off, right? But we also want to see how many of these people were easily able to find jobs, and whether or not if they're higher paying jobs or if it's lesser paying. That is yet to see a result in Q3, how these people who were laid off, how quickly are they able to find jobs and fix their economic standpoint, because ultimately, that's going to drive their ability to spend. And I want to say in Q3 is going to be also critical, because that is going to tell us how people are actually spending. Are the consumers still strong, and are they able to easily pick up their losses from being laid off, and fix their financial standpoint and then their economic standpoint to be able to continue to uh, pay their expenses. So that is going to be later on down in Q3 report, and how these businesses are reacting to all these layoffs. But as of right now, Q2 looks pretty strong, but we are yet to see what is going to take place this week, because obviously what we saw here was a on a smaller time frame, on the daily time frame, right? What we saw here on tech, we saw this doji candle. So we want to see how this is going to play out. Ultimately, we'd want to see it pull back to the mean, and to the mean would mean to me 372.15. So I believe that the market can pull back to this level, and if it does, you know, within this week, I want to say that earnings will pick up, will carry the market forward once we get around to the tech earnings, right? So if the market pulls back, great. That is going to be a place where we can start buying once again, because any pullback that we see in this market has proven to be a buying opportunity, especially in the past few months, right? So again, trend is your friend until it ends. If we see a dip, we are buying. So if you like this video, please make sure you go ahead and give it a like. It'll help out with the algorithm. Also, uh, please go ahead and subscribe to the channel, and we'll see you on the next one. Peace.